The U.S. job market is experiencing significant shifts that are affecting workers at every level. The Bureau of Labor Statistics cut its job growth numbers by over 900,000 jobs for the year ending March 2025, meaning these jobs were counted but never actually created. Meanwhile, the official unemployment rate sits at 4.3%, leaving 7.4 million Americans actively searching for work amid a tightening and unpredictable job market. Put a finger down if you're laid off and have been applying for jobs for over 2 years. You've applied to hundreds of jobs and tailored your resume to every single one of those applications. So now you work 5 different part-time jobs, barely making $40K a year, live in low-income housing, and now we live in a looming recession. The job market's about to crash, and you truly don't know what to do next. So what exactly is happening? We're seeing what could potentially be a job market recession, a sustained period where job openings decline, unemployment rises, and workers face increased difficulty finding employment, even when other economic indicators may appear stable. Several major factors affecting this include rapid AI-driven automation, shifting economic conditions, and structural changes in how people enter and grow within the workforce. Today, we'll examine how these forces are reshaping employment, from corporate restructuring to graduate job prospects, and what they mean for workers at every stage of their careers. The current environment shows some contradictory trends that reveal how modern economies can expand while individual job security decreases. Stock markets have reached record highs throughout this year. The S&P 500 has rallied approximately 35% since spring. According to CNN Business, the Dow Jones closed above 47,000 points for the first time ever in October. Corporate profits remain strong. S&P 500 member companies' profit margins reached 13% in the third quarter of 2025, at record levels according to Bank of America research. Meanwhile, layoffs tell a different story. CBS News reported that as corporate profits soar, companies have cut nearly 1 million jobs in 2025, the most since 2020. U.S. employers announced 1.1 million layoffs year-to-date through October, representing a 65% year-over-year increase, according to Challenger, Gray, and Christmas data. This disconnect reflects how modern markets operate. Companies can increase profitability through efficiency gains and automation while reducing headcount. Economist Qin Zhao, chief global strategist at Alpine Macro, calls this a jobless boom, where layoffs accelerate even as companies report strong profitability. Wall Street often responds positively to cost-cutting measures that improve profit margins. At the same time, cost of living pressures are intensifying the challenge. The Bureau of Labor Statistics reports inflation at 3.0% as of September 2025, while the National Association of Realtors found that 79% of workers cannot afford to purchase a home at current median prices. Technology is reshaping employment at an unprecedented scale, and AI is advancing beyond simple tasks into complex professional work. U.S. employers have announced 77,999 tech job losses directly linked to AI and automation, with cuts at major companies like Amazon and Microsoft contributing to nearly 500 people losing their jobs to AI daily in the first half of 2025.
Big tech is back in the headlines. The industry that built the future is now rewriting its own. They're cutting jobs, they're restructuring terms of engagement. And at the center of this churn is artificial intelligence. The latest company to make headlines is Amazon. It plans to cut thousands of jobs. Reports say anywhere between 14,000 to 30,000 jobs.
But AI is now advancing into complex work. McKinsey research shows that generative AI could automate up to 30% of hours worked in the United States by 2030. Bloomberg research reveals AI could replace 53% of market research analyst tasks and 67% of sales representative tasks. Even traditionally, secure fields are affected. Goldman Sachs estimated that generative AI alone could impact up to 300 million full-time jobs globally, including high-skill sectors such as law, media, and finance. Entry-level positions face particular vulnerability. Deloitte's 2025 research found that AI technologies are being developed to automate the very tasks that entry-level workers typically handle, which could lead to a decrease in entry-level job openings and limited opportunities for on-the-job learning. National university data shows that 40% of employers expect to reduce their workforce where AI can automate tasks. However, the World Economic Forum report projects 170 million new roles will be created by 2030 in AI development, green technology, digital infrastructure, and emerging sectors. That's a net gain of 78 million jobs globally. The challenge is the transition period. The jobs of the future exist today, but the workers of today may not yet have the skills for those jobs. This gap creates what's often called a skills mismatch, where workers need to reskill or upskill to access available positions. The numbers back this up. National university research indicates that 59% of workers will require upskilling or reskilling by 2030. The Coursera Skills Report found that workers obtaining in-demand certifications like AWS, Google Data Analytics, and CompTIA Security Plus see their interview callback rate increase by 42%. But retraining takes time and often money, creating a significant lag between job displacement and workforce adaptation. McKinsey research indicates that 12 to 14% of workers may need to transition into new occupations as automation reshapes the employment landscape by 2030. The traditional career pyramid, where many workers enter at the bottom and advance to higher levels, is collapsing into something more like a diamond. And that creates a fundamental problem. When the base narrows, the entire structure above it suffers. Entry-level positions are disappearing. Those that remain increasingly require experience they're supposed to provide. More often than not, it's literally just rejection, rejection, rejection. Sorry, you need 3 years of experience. Actually, I was inquiring about the entry-level position. You need 3 years of experience for that job. According to Schrum Research, employers now ask for 2 to 3 years of experience for 61% of full-time jobs, positions that were previously considered entry-level. This creates the experience paradox. How can you gain experience if every entry-level job requires experience? For recent graduates, this creates immediate challenges. The Federal Reserve reports that the average 2025 graduate carries approximately $39,000 in student debt, adding financial pressure to an already difficult entry point. Here's where the diamond structure reveals its true impact. When fewer people can enter at the bottom, fewer people develop the skills and experience needed to move up. Companies traditionally relied on a steady pipeline of entry-level workers who would learn, grow, and advance into mid-level and senior positions. When that pipeline constricts, the entire internal mobility system breaks down. Mid-level positions feel this squeeze from both directions. There are fewer workers advancing from below with company-specific knowledge and experience. LinkedIn's economic graph data from the third quarter of 2025 shows remote positions in project management and cloud architecture increase more than 30% year over year. Roles that typically require 5 to 7 years of progressive experience that fewer workers are now able to obtain. At the senior level, companies need experienced leaders, but the traditional path to developing them through progressive roles starting at entry level has been disrupted. Meanwhile, growing sectors like healthcare and software development require specific credentials, with healthcare support jobs projected to grow by 11.5% through 2033, and software development by 25% by 2032. But these opportunities don't solve the fundamental problem. When the base narrows, fewer people gain the experience needed to advance, creating fewer qualified candidates for mid-level roles and ultimately affecting leadership development throughout organizations. So, where does this leave us? The reality is stark. Layoffs are accelerating. Entry-level positions are vanishing. Automation is reshaping entire industries, and the traditional career ladder has been fundamentally disrupted. The diamond structure is squeezing workers at every level, from recent graduates facing the experience paradox to mid-career professionals competing for fewer advancement opportunities. We can't control these macro forces. We can't stop automation. We can't reverse the structural changes in how companies hire and develop talent. But what we can control is how we respond and position ourselves in this shifting landscape.